Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. How are you?
I'm doing well. I'm doing well back in Jeff City for today's episode, and finally got my camera back and going there. So maybe
Yeah.
a positive, maybe a negative, but everyone can see my face again. Ben, you're
You look
actually kind
sharp.
of out and about in the field, though. Where are you at right now?
Yeah, so I'm home in West Central Missouri. My family has a farm and cattle operation in West Central Missouri, and we started wheat harvest yesterday. So I'm home helping with wheat harvest this week, and so this is actually my childhood bedroom. For maybe that's too much information, I guess, maybe for our listeners, but there's not a great place at mom and dad's to record this, so this is the best I can do today.
Yeah, so with all that green in the background, I guess you're a John Deere, not a red tractor type of guy, you know.
I'm not sure I'm supposed to have an opinion working for a university. I think we're supposed to stay pretty unbiased, but I think just I'll end it at that comment, and we'll let our viewers make their own determination what the green might be for. So
Well, Ben, speaking of green and red, we saw a lot of positive adjustments, a lot of green adjustments coming into the market this week. Just a quick rundown for that July corn crop, we saw up 25 cents at 642. December corn was up 45 cents at 594. July soybeans up 97 cents at 1469. November 23 soybeans up up $1.26 at 1335. July soybean oil was up a little over 5 cents at 59.09 cents per pound. Soybean meal for July was up $20.70. So Ben, that contract you said to keep an eye on, it is going up right now, 418.10. July wheat for the 2023 year up 48 cents at 681. Next year, July wheat, 24 wheat, up 40 cents at 730. And then crude oil for August was up $3.65 a barrel on the week at 71.24. So yeah, Ben, just a kind of a note there looking at that soybean meal price. You did say keep an eye on that. It does seem to be fluctuating quite a bit.
yeah, we've been kind of on an upward trajectory here for the last couple of weeks, up $20, $21 this last week. We were up the week before as well. So we're going to have a solid soybean meal export shipping window this summer out of the United States. Our soybean meal is competitive on the global market. I look for quite a few shipments out of the Gulf of Mexico in that soybean market, and that's going to help, with that price as we look ahead. The other thing I want to point out on what you just said there, that December 23 corn up 45 cents this week to trade just below $6. We actually traded above $6 overnight last night. And the reason I want to point that out is it was exactly a month ago. I looked it up this morning. Well, I looked it up over the weekend because I was looking at corn and I was thinking, gosh, we've been up almost $1. And sure enough, it was May 18th that we traded below $5. And it was June 19th, and we traded above $6. So $1 increase in that new crop corn in a month, largely led by weather. At least concern over weather in a short corn crop here in the United States. Certainly, the demand is not helping our picture there on the corn side, but weather concerns maybe giving us that little June rally. Potentially, maybe some of the higher prices we see this year.
Well, and that's really where I want to start the conversation today, looking at the conditions that we're seeing across the bigger, Midwestern states when it comes to corn and soybean production. So last week, my dad and one of my younger sisters, they went up to Des Moines, Iowa to watch the World Pork Expo, or the exposition as they're calling it now. But they said that a lot of conditions in northern Missouri and into Iowa didn't look all that great, especially compared to central Missouri. So as you kind of see that across the Midwest. What's your read on the situation of what we're seeing condition wise?
Sure. Yeah. So Midwest crop ratings have continued to kind of slide lower here in June. I anticipate on Tuesday of this week, because of our federal holiday Monday, the last week's crop conditions ratings will come out this afternoon on Tuesday, which is unique for us, right? So, but I anticipate that the crop conditions ratings this afternoon will slide even a little bit further, right? So a continued kind of erosion in that. However, some of the rains that we have seen over the last week or so, last week to 2 weeks, have kind of helped stall some of that erosion, but dryness still persists. And even in the subsoil region, it's pretty depleted across the Corn Belt. So we haven't reversed the drought. That's kind of the main thing, is like the rains of maybe buying us some time and slowing the erosion, but it certainly hasn't reversed the drought. There are pockets that are of concern, and I think you've appropriately identified a couple of those. Northern Illinois, eastern Iowa, and southern Minnesota are a couple areas where we grow a lot of corn that continue to see, they're missing rain. They're facing temperatures, and especially with the high temperatures expected this week, we'll probably see some more erosion, kind of in that region as well. So all that said, let me put a bow on this and then we can talk about, or let me put a bow on my comments and then we can talk about it. Yield potential remains close to average for the majority of the Corn Belt, right? Like we're not gonna hit that 182 bushel per acre, but 178, 179 isn't out of the question. Okay, that would probably be my main point here. However, with these pockets of dryness in some of these major growing areas, that's providing enough of a yield drag that we're starting to see that national yield come down some. So a couple areas to watch, and key growing areas, but still relatively average across the entire region.
Well, I think we're in an interesting position right now when you look at the market holistically, right? Because you talk about the national average starting to maybe get dinged a little bit looking longer term, but it's still early enough in the season that, if the rains start hitting some key areas, a lot of these production issues can be still averted. So at what point does the market start really heavily saying, all right, the dryness is continuing, now we're going to really start pushing prices higher? So what's that time frame look like, maybe from a market standpoint?
But I think we're there to some extent. June tends to be, that month where if it's dry in June, it gets the market pretty concerned, and we start to see this rally in prices, and we've seen that, right? Like, I mean, we've seen that here in June. As far as looking ahead, that second week of July, or it's really that first week, the end of the first week of July, I think has traditionally been that, that philosophical threshold to where if we don't get those rains right at corn pollination, that's when people really start to get, very concerned. I was looking at some of our corn. Dad and I were looking at some of our corn this week, and we've got corn that's tasseling here in West Central Missouri. Not just us, but like, our neighbors and all those around us. So the rains we got this last weekend are certainly going to help that corn as it starts to pollinate. However, there's a lot of corn that isn't at that stage and will be pollinating here in probably 2 weeks, and having rain at that point. Now, I'm just talking about our small part of the world, but it applies broadly across the region. That first week, 10th of July, somewhere in there, is a critical period to where if we don't get rain to help with the pollination cycle, the psychological nature of the markets will just really take off. So we've got some buffer here. The soft corn demand this calendar year is kind of providing a little bit of a buffer for lower yields, right? We could go down to 175, 174 bushels to the acre and still have a larger carryout this year than we did last year. However, that erosion happens very quickly. If you continue to see yields fall, right, that happens a lot quicker than what we see demand destruction usually. So, we got some buffer room here. Markets are certainly working their way up. As we work our way through the rest here of June and into July, the forecast is for some rain, some nice soakers. They've largely disappointed. They haven't been as big as what many people had anticipated, but they're certainly, there's a possibility that they could come in and kind of save the day, if you will. But we got to see them. We don't have much room in the subsoils.
So really kind of shifting gears here to maybe a totally different topic in some regards. The NOPA report last week, we got some pretty, I guess, hefty reports, hefty numbers from that. It was up 2 million bushels from the average trade guess, and their members crushed almost 178 million bushels of soybeans. Ben, what does that really signal to you on the mood of soybean crush in the market in that regard?
Well, so that report was pretty bullish all the way around, whether it was the soybean crush or even the soybean oil use, right? So we can kind of think about, if we crush this many soybeans, we get this much soybean oil. And if we only have, an X amount of soybean oil pounds left, we use the remainder or export it or whatever. And so it was a pretty bullish report all the way around. You correctly mentioned that the reported volume was up 2 million bushels higher than the average trade guess at the top end of the range. It was up from May and April. It was up from April and up from May of 2022. So, a pretty strong report. When we look at that soybean oil stocks number, that volume was below even the most bullish estimate, right? So we think of bullish in the oil category, or the oil stocks is on the low end, and so we came in below the lowest trade guess, indicating very strong use in May. And so I think all that is what helped lead that soybean oil, or that soybean complex, higher. We talked about new crop soybeans up $1 plus for the week, and that was largely due to this, plus some decent export sales for the week as well. So demand on the soybean side is holding in there, and we've that was the anticipation, that we could see solid soybean demand numbers through the summer to help kind of support that complex.
Well, you mentioned the positive that we saw on the trade front, maybe one of the better weeks that we've seen of 2023 so far. So do you see that continuing maybe on the export front, or what are your expectations?
Well, it was a good week on the export sales. Everything with the exception of wheat was fairly strong for this time of the year. And on the soybean, staying with soybeans here, soybeans were the highest volume in 3 months. And so we have seen some sales. As to, do I think it can continue? Actually, I do think it can continue. Brazilian soybeans are still cheap, but they're exporting as much as they can, and so we're seeing some buyers look at the U.S. for some later shipments to maybe come into July, beginning of August, right? So they're booking a few weeks out at this point. But certainly, even with the kind of the cheap nature of Brazilian soybeans at the moment, there's buyers are trying to get more, even more than what the Brazilian shipping capacity is on a weekly basis. And so, we've seen a little bit of activity come back into the U.S. market.
Well, and just on that, we've seen that sharp demand increase for Brazilian soybeans, and part of that, is the split in price. But like you said, the demand it's so aggressive that it's still spilling over into the U.S. market.
Yep. And that could continue for a couple weeks here. I think we could have a couple of weeks of solid soybeans gains, especially if purchasers are worried about being able to source soybeans in that August, September window, when Brazil is almost out of beans and the U.S. harvest hasn't really started yet.
So, Ben, looking forward, this is a shortened trading week after the federal holiday on Monday. Well, what are you really looking for? What are you really watching, and what should farmers and ranchers be paying attention to?
Yeah, so everything's delayed today because of that holiday this week on Monday. The one thing I will say, and we mentioned it at the end of last week, but it's the renewable volume obligations for the biodiesel market. The EPA was court ordered last week to release those, and they were granted a 1-week extension, which ends tomorrow, June 21st. And the reason this is important is because it's the renewable volume obligations for 3 years here. So we're used to kind of a 1-year release. We're getting 3 years at a time, which is something the industry asked for to provide more certainty to the market. However, everybody would like 3 years of standards as close to their policy priorities as possible, regardless of where your position is. That's a statement that applies to everybody, is that you want multiple years as close to your policy preference as
and these things could be fairly far apart too.
And those things can be very far apart, right? And so, and the problem is it can go really good or it can go really bad, because if you get something that you don't want, well, now you've got 3 years of something you don't want. And so the industry is very closely watching this, waiting for those renewable volume obligations. And it's the soybean oil complex that has arguably the most, at stake here, especially in some of those advanced biofuels like sustainable aviation fuel, renewable diesel, things like that. Getting that in place would provide some security to that market. It would also provide a very bullish or bearish factor either way, depending on what happens. So that's the big thing to watch this week. If we see big movements, my guess is that that's probably part of the reason.
All right. Well, Ben, it's always a pleasure getting to have your knowledge and me picking your brain on this program here. So viewers, listeners, if you'd like to learn more about what we do, check us out at brownfieldagnews.com. You can also view our sister program, the weekly livestock market update, at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.